Harvest ETFs is expanding its single stock income lineup, this time with a Canadian twist. Here's everything you need to know about the new Harvest Canadian High Income Shares ETFs and how they're structured. Harvest has filed a preliminary prospectus for a new suite of Canadian Harvest High Income Shares ETFs. These ETFs aim to provide long-term capital appreciation by investing, directly or indirectly, on a leveraged basis in the common shares of well-known Canadian companies. Their single-stock ETFs include the Harvest Agnico Eagle Enhanced High Income Shares ETF. Agnico Eagle Mines is a major Canadian gold mining company with operations in Canada, Finland, Mexico, and Australia, known for its focus on gold production and exploration. Harvest BCE Enhanced High Income Shares. BCE Inc., also known as Bell Canada, is one of the largest telecommunications companies in the country, offering wireless, internet, TV, and media services nationwide. Harvest Cameco Enhanced High Income Shares ETF. Cameco Corporation is one of the world's largest uranium producers, supplying fuel for nuclear power plants and operating mines primarily in Canada and Kazakhstan. Harvest CNQ Enhanced High Income Shares ETF. Canadian Natural Resources Limited is one of the largest oil and natural gas producers in Canada, with operations in Western Canada, the North Sea, and offshore Africa. Harvest Enbridge Enhanced High Income Shares ETF. Enbridge operates one of North America's largest energy infrastructure networks, including crude oil pipelines, natural gas transmission, and renewable energy projects. Harvest Royal Bank Enhanced High Income Shares ETF. Royal Bank of Canada is the country's largest bank by market capitalization, offering retail banking, wealth management, and capital market services globally. Harvest Shopify Enhanced High Income Shares ETF. Shopify is a leading global e-commerce platform provider, enabling businesses of all sizes to set up and run online stores and process transactions. Harvest Suncor Enhanced High Income Shares ETF. Suncor Energy is a major Canadian integrated energy company, best known for its oil sands operations, refining, and retail fuel network. Harvest TD Bank Enhanced High Income Shares ETF. Toronto Dominion Bank is one of Canada's largest banks, serving over 27 million customers in Canada, the US, and internationally, with strong retail and commercial banking operations. And lastly, the Harvest TELUS Enhanced High Income Shares ETF. TELUS Corporation is a national telecommunications company offering wireless, internet, TV, healthcare technology, and digital solutions. They also have their all-in-one Harvest Canadian High Income Shares ETF, a diversified basket holding a selection of these major Canadian companies, designed to deliver high monthly income with exposure across multiple sectors. Like all their other high-income ETFs, these ones also uses modest leverage to amplify potential returns, actively sells call options on a portion of holdings to generate option premium income, and pays monthly income from dividends, option premiums, and other sources. So why is this lineup such a big deal for Canadian income investors? First, it's all about cash flow. These funds take some of the most recognizable companies in Canada, the banks, telecoms, energy giants, even Shopify, and turn them into steady monthly income machines. Second, you get sector exposure without having to pick and manage the stocks yourself. If you already like Royal Bank, Enbridge, or TD, these ETFs give you the same exposure, but with a built-in income strategy. Third, the yield is enhanced. The managers use a mix of modest leverage and active covered call writing to boost payouts beyond what you'd get from the stock's regular dividend, and you don't have to lift a finger. Fourth, they're TFSA and RRSP friendly. No US withholding taxes, no foreign exchange hassle, just Canadian listed income you can hold tax-free or tax-deferred. And finally, you can go concentrated if you want a single name like RYHE for Royal Bank, or diversify with something like HHIC that holds a basket of them. Personally, I'd be looking closely at a few of these, especially the Shopify one, ticker SHPE. Here's why. Shopify isn't your typical dividend stock. In fact, it doesn't pay a dividend at all. But through this ETF structure, you can actually generate monthly income from it. So instead of waiting for a dividend that may never come, you're collecting option premiums as income. It's also a pure growth name in the Canadian market. Shopify is a global e-commerce leader, and while the stock can be volatile, that volatility actually works in your favor here, because higher volatility means higher option premiums and higher potential income payouts. So, if you've ever wanted exposure to Shopify's upside, but also wanted to get paid along the way, this ETF essentially gives you both growth potential and monthly cash flow. So with these new additions, Harvest is giving Canadian income investors even more tools to build a portfolio that can generate consistent monthly cash flow while still getting exposure to some of the country's strongest and most recognizable companies. Whether you're looking at the banks, energy names, or growth plays like Shopify, there's something here that could fit a variety of income strategies. As always, this is not financial advice. Do your own research, talk to a licensed advisor, and make sure any investment aligns with your goals. If you found this breakdown helpful, hit that like button, subscribe, and turn on notifications so you don't miss future updates on income ETFs like these.